Good morning, Steve here in Chicago with the morning grain calls. Well, prices are higher, but off the overnight highs. Initially, we were sharply higher because of a 2-week forecast that was drier than normal across much of the Midwest. We also see some very hot temperatures in the southern plains across into parts of the Delta and up into the southern western Corn Belt. We then saw where China is going to lock down again certain parts of its country due to spread of COVID. And that weighed on the grain markets, it weighed on crude, and many of the soft commodities that rallied in hopes that China's economy was going to turn around. We're also hearing more and more talk about U.S. inflation continuing and not topping out, which could force the Fed to raise rates further into 2023. Most people had thought this July meeting could be one of the last ones that they raise rates if they come out and feel that the CPI data this week had showed inflation beginning to decline. The other thing is that we're watching weather in Europe, which is dry. Parts of eastern Ukraine, southwest Russia might get some rain, but still overall the pattern is drier than normal. And we also see that Argentina continues to be dry, and some government policies down there could restrict exports and imports of dollar-denominated materials. So geopolitical issues, weather around the world is, I think, supportive to the grains. I'm not sure about the commodities yet, because the dollar is stronger, and some people were hoping that in September the dollar would peak if the Fed decides that they don't need to increase rates in 2023. Tomorrow we have a USDA report. People are not looking for big changes in the corn S&D. They, in fact, might even increase it a little bit with increased acres. The wheat carryout will be the number that they came out with June 1 stocks plus this year's crop. Some people are actually increasing this year's wheat crop a little bit, which adds to the carryout. The big unknown there is just what is going to be exports. In the corn, stocks could be up because of increased acres. In the beans, though, the numbers could be down for 22-23 because of the lower acres. I doubt if the USDA has enough evidence to push the yield higher to compensate for the lower acres. And then soybeans, the big unknown is exports. Will China take the beans that people think they need to take with our prices competitive? So finally, I can't really decide if the glass is half full or half empty today. Weather is supportive. Some of the price action on Friday is supportive. The funds are pretty much liquidated out of their positions. Big, large, long positions, and we think that the 5-week drop in raw material prices might be near an end. But we still have to worry about just the overall inflation outlook and China's COVID lockdown. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.